Hi, it's Professor Marsh again, and this is Accounting 210 at Newberry College in the spring of 2022. I did want to uh, do a review of your quizzes. I've now graded all of the quizzes for the first half of the semester, and so these are my notes about the quizzes for units and chapters 2, 3, and 4. Uh, the quiz for Chapter 2 was the problem. The problem was the loan that Cheesy Chuck wanted to take out in order to expand his business. Some of you thought that the marketing consultant was something of a con woman, and so you were skeptical of making the loan. And while that's a normal reaction, it's also an emotional one. Not driven by the numbers in this case. It might be unusual and refreshing in the real world for a consultant to take the risk that she wouldn't get paid if she didn't at least double your sales at the same price or profit margin. However, I'd probably hire her unless my due diligence search of her and her business found a number of previous complaints. You can check out that sort of due diligence information and search for negatives and complaints pretty thoroughly online nowadays. Cheesy Chuck made a $5,800 profit on $85,000 in sales in the prior period back in section 2.3 of your textbook. So if Chuck could double his sales at the same profit margin, he would make a profit of $11,600. More than enough to repay the $10,000 loan in one period. And these sorts of business loans are typically repaid over a period of a couple of years if it's a significant investment for the business. So something along the lines of a 10-month or 11-month payback on the loan. That's a pretty easy loan for most lenders to make. And if you were even more sophisticated, you might have noticed that one of Chuck's biggest expenses, rental expense, which was $24,000 for the period. That's a very high percentage of expenses for rent. That's a fixed cost, not a variable cost. So that Chuck probably would have an even larger profit margin on the incremental revenue created by the marketing consultant, unless he had to substantially expand his space in order to handle the additional sales, which the problem didn't seem to indicate that. So that that was a discussion. Lots of you had good discussions of the problem, but that's kind of how I look at it. And so then for the quiz in Chapter 3, Unit 3, the Section 2 problem, the trial balance. Here's how to answer that problem. When you see all of these accounts listed that are on the trial balance, the problem doesn't tell you what the normal balances are, and so you just have to remember that assets, the normal balance is going to be a debit. Expenses, the normal balance is going to be a debit. For liabilities, the normal balance are credits, and I think some of you had difficulty separating expenses from liabilities. So just with more practice, you'll gain more familiarity with that. Owner's equity are typically credits unless there's been an accumulated loss, but the normal balance is a credit balance for owner's equity. Remember, assets equal, and the assets of the debit side equals liabilities plus owner's equity. So owner's equity is part of the credit side of the equation with liabilities that equal assets. So credits would be contributed capital and retained earnings. Remember that there's a negative account for owner's equity, which is dividends. That's when you pay out the earnings. You don't retain them, but you pay them out. So if you see dividends in a trial balance, that's actually going to be a debit normal balance. Then you use a 2-column worksheet. So you would set up a 2-column worksheet and you'd list all of those accounts. And you'd put the debits in the debit column, which would be the first column or the left-hand column, and then you put all the credits in the credit column. That'd be the second or the right-hand column. So you've got those, and then you add up each column, and hopefully the total of each column will agree. But in this case, for many of you, it didn't agree. If the columns don't agree, then try your troubleshooting tricks. Okay, these are the ones we've talked about before. The first thing to do is subtract the column with the lower total from the column with the higher total and calculate the difference. Then look for an account, all the accounts that are listed there, those balances, find one that equals the difference. If you find one, you either omitted it or you included it twice. If you don't find anything that pops right out there, then divide the difference in two. If the result of the division is that one of your numbers is one of your numbers in your accounts, it means you put a debit in the credit column or vice versa. And if that doesn't work, then divide the difference by 9. And if the result of that division is a whole number, then it may mean that you made a transposition in moving a number from the account ledger into the trial balance, such as putting in 5,400 instead of 4,500, which would give you a difference of 900, which is evenly divisible by 9. And if none of the tricks in that step work, then you've made several mistakes, and you need to go back through each line of the trial balance to compare it to the accounts to see where your mistakes are, or you may have made mistakes in transferring journal entries into your ledger accounts. That's Unit 3, Chapter 3. Then the extra credit question that was on your quiz for Unit 4 about the Khan Academy. Month 3 revenue under the accrual method of accounting is $0 because you had 0 offense. The accrual numbers are in the white writing on the blackboard, and there was no quiz for Unit 5 or Unit 6. So anyhow, I've posted my notes in your materials, and also this lecture explaining the answers, particularly the second section answers to the quiz. You can see the multiple choice questions and how they were graded in Wolf Den. Have a great day, and we'll talk again with you soon. Thanks. Bye-bye.